Welcome to FXStreet. If you like what we're talking about, you like the content we're producing, head on over to YouTube, hit that subscribe button. You can follow Akash and I individually, myself at Just Analysis 1 and Akash at Mangyeko0. So looking here at Ethereum, Ethereum had one heck of a week last week. I mean, if I was somebody who shorted this market, I would feel like the cryptocurrency fairy came by and punched me in the face really hard right on Friday, ruining my entire week. Because for a good chunk of the week, Ethereum looked very bearish long term. I mean, it was poised to close the week, below the cloud, initiating an ideal bearish Ichimoku breakout, the first one since the COVID crash of 2019, or sorry, 2020, and only the second time since June of 2018. So, these incidences of where there's a daily close below the cloud, and then the Chiku span has a close below the bodies of the candlestick, and then candlesticks, and it's in open space. Doesn't happen that often. And when they do, they're often major, trend confirming bear market events and that also really kind of show you how long the bear market can last. But instead, the weekly close was below two levels that it didn't need to close above, but it would have been ideal. And unless something drastic changes between now and Friday, it'll show that it really didn't matter. But I mean, it closed just a hair below the top of the cloud at Senko Span A and the 618 Fib retracement. However, when you look at what's happening today, going into Tuesday, and then yesterday on Monday, had a really nice rally. But this candlestick here is known as a dragonfly doji, which is really just a body that is very small to non-existent, with some people might call it a long leg doji too, but this candlestick by itself is not enough to confirm a bullish reversal. We need to see a follow through candlestick this week to even closing where it's at would likely confirm a new move higher. But the oscillator values are something that we talked about last week a lot too. Was these oscillators are sitting at these historical lows. There's the lowest low in Ethereum in the composite index since August of 2019. We're oversold in the optics bands by an extreme amount, and then you see a nice bullish bounce developing off of the last oversold level in the bull market at 40 in the relative strength index. So, Ethereum looks primed to have a nice bounce here. As far as how high it's going to go, I would say it'd be limited to anywhere between 3,300 and 3,500. That's where the 382 Fib retracement is at, and then the Tenkan Sen and the Kijun Sen on the weekly chart are also in that zone. As far as downside risks, I would say that we're limited to the 2350 level. That's the bottom of the cloud Senko Span B. But if there is a close below that, oh man, that would be pretty ugly. But again, the oscillators just don't show a lot of support for further downside momentum here. That'll change. It'll be interesting to see, how Ethereum is performing when it gets near that 3,300 to 3,500 level. But we'll have to wait and see what happens there. That's what I see for Ethereum, Akash. I'm not sure what you see. I'll pass it off to you.
Thank you, John. For Ethereum, I am kind of looking at it a little differently. So what I see here is two important conditions. One is this higher high that was formed here, causing a market structure break. That's what MSB is. So after this market structure break, after we've got a higher high and this demand zone formed here, ranging from 2,789 to 3,167, the price proceeded to slide below this. As you can see here, the initial reaction as it bounced, as it entered or tagged this demand zone here, was a minor bounce, but the selling pressure kind of overwhelmed the buying pressure, leading to a clean slide below the set demand zone. Although price did find a good amount of support here at 2,324, and bounced off of it, right? And is currently retesting this breaker. And I don't see it going beyond this breaker because this is a perfect setup for a bearish breaker. So what happens during a bearish breaker is the price sets up a higher high and a demand zone. But once the price breaches the demand zone, it flips the demand zone into a breaker. And any retest of this demand zone is going to be rejected, leading to a downswing. And that's what I'm expecting here for Ethereum, a move lower to 2324, which is the first target. But eventually, I see Ethereum heading down to 1,730 and collect the liquidity resting below this triple bottom here that was formed in July, anywhere between May 18th to July 21. So that's what I'm expecting for Ethereum. This bearish thesis, right? I think will face invalidation if Ethereum produces a close above the bearish breaker's upper limit at $3,167. But just to be sure, I want it to produce like a daily close above 3,413, which was the swing high formed here on 13th Jan. So either way, I'm expecting if we look at it from, so it's a good 1.8 hour trade with a roughly 40% downswing as our target. So yeah, this is my take on XRP. Although it's a little bearish than the usual stuff, this is what I expect is going to happen over the next couple of days, probably weeks. So yeah, that's it from me, John.
Thank you everybody for watching. Please don't forget to like, comment, and subscribe.